Hello everyone, this is CJ with Cyclotron. Well, today I thought I'd talk about Harley Davidson third quarter corporate results. They just had their earnings call on October 26th. Also, there's some new developments with the LiveWire division that Harley spun off as a separate company. When they spun that off, the intent was for Harley to own 70% of LiveWire, with outside investors buying up the other 30%. So that hasn't gone so well. I'll give you the specifics, as well as what this latest earnings report indicates for next year, for 2023. Harley Davidson has announced that they've started production for the 2023 model year. So I'll break down the overview, what it all means, some of the implications for Harley going forward for both the conventional internal combustion engine motorcycles as well as their electric LiveWire motorcycles. So let's jump into their third quarter results. They've done very well. There was a huge bump in their stock price. On the close of business on the day before their earnings call, Harley stock closed at $37 a share. As of last Friday, it's trading around $45 a share. Harley seems to be so pleased with their recent increase in stock price that they've started putting the current stock price on their investor relations page on their website, which I don't recall seeing before. If any of you have seen that before, please let me know, but that seems to be a new development. So let's jump into their press release for their third quarter earnings call. Harley announced earnings of $1.78 per share, which is up 73 cents from prior year earnings. So that's a big jump. They're also making significantly more revenue. A lot of that has to do with higher motorcycle shipments in third quarter as compared to the third quarter last year. And that's because they're trying to make up for the production decrease that happened in second quarter due to supply chain issues related to problems with their brake components from a third-party vendor. So if we go down here, we see total shipments for motorcycles in the third quarter of this year, 57,000 units compared to 48,000 last third quarter. So if you go back and look at previous earnings statements, year to date, Harley's produced 160,000 motorcycles, which is about what they produced through third quarter of 2021. They said they expect to produce the same number of bikes fourth quarter as they did last year. So that'd be around 29,000 motorcycles. So for a total production of around 189,000 motorcycles for 2021 and 2022. So we'll see if they can deliver on that, since they've switched over to model year 2023 production. And they're making a lot of money. Their operating income's up significantly at $258 million versus $98 million year to year. Harley's indicated that the big reason for that is that they managed to pass through price increases on their motorcycles far in excess of the increases that would be required just to cover increased material costs, production costs, and due to inflation. So Harley's price increases are greatly outstripping inflation-related price increases. Now let's jump over to some of their slides from their earnings call. This is where Harley indicates that their pricing is greatly outstripping inflation. So you can see down here they mentioned that they completed their merger between LiveWire and this outside investment company on September 26th. I'm going to go into a lot more details associated with that. It hasn't gone nearly as well as they had hoped. In fact, it's gone rather poorly with that spinoff. So you can see retail motorcycle sales in terms of volume are down 5% in North America. Worldwide, they're down 2%. You can also see here that Harley's market share, it continues to decline. In the US now, for the 601cc plus market for motorcycles, they're down to a 41% market share. They're still holding steady at 6% in Europe. So let's jump down here into the key drivers on their profitability as indicated by Harley Davidson. Since 2019, they've produced 23,000 fewer motorcycles. That's come through trimming of certain models from the lineup as well as reduced production. They're not offering any deals right now, and their pricing is more than necessary to keep up with inflation. And they're also saving on production costs. There was an announcement recently that they plan to let all their headquarters workers work from home in Milwaukee, or most of them, so that they're going to do something with their office complex. It sounds like at least they're going to sell the land that was associated with the parking lot. So So far they indicate that they plan to hold on to that headquarters building, but its future use is a bit uncertain at this point. So let's just jump down here to this slide here. The loan defaults for Harley Davidson Financial Services recently have averaged about 1.9%. You can see that they've ticked up from fiscal year 21 by about 0.3%. If we get into a recession, look for those loan defaults to increase significantly. Now, perhaps Harley mitigated some of their exposure there by issuing bonds about 18 months ago against their loan portfolio. So it may be the bondholders that are mostly messed over if loan defaults increase significantly. All right, so now let's jump more into the LiveWire. Here's a Visor Down article that talks about how important it is for Harley Davidson, at least in their thinking, to spin off LiveWire as a separate company. Now let's jump over to this Jalopnik article that just came out a few days ago. Looks like $370 million of initial investment by outside firms have been pulled out in the month or so since that separate company was launched and funded. So that's not looking too good for Harley Davidson. Harley initially put in $100 million into LiveWire. They retain 70% ownership, or at least that was the plan. And because of this fleeing investment, Harley Davidson's had to put in another $100 million into LiveWire. So now they're 90% owners of a company that they tried to spin off separately. So Harley planned to generate $545 million from this spinoff, but they only generated $294 million. So here's talks about Harley throwing in $100 million when they went public, but they've had to pony up another $100 million with all these investors pulling out. So this article mentions you can't make too much of investors pulling out initially. Maybe they were in there for a quick buck. I don't think that worked out, but we'll see. It's a pretty risky investment model. So let's go over to the LiveWire website and see what they're up to these days. Well, you can see the LiveWire 1 model, which a few years ago Harley rolled out at the cost of $30,000. It's at $22,800 these days. They're really emphasizing the lifestyle aspect of the LiveWire brand. This shows the distribution of LiveWire dealerships. I guess there's one here in Kansas City. I haven't been to that. Might have to check that out sometime. Looks like they're compiling playlists that you can listen to on Apple Music or Spotify that are somehow tied into the lifestyle or the ethos of the LiveWire brand. So let's look at this Milwaukee Business News website article. They indicate that most of Harley's LiveWire revenues come from kids' bikes. If you read the article, they indicate that it's more 50-50 because Harley incentivized their dealers to sell LiveWire models to the tune of $15 million. So if you account for that, the non-motorcycle revenue is around $41 million. And then the motorcycle revenue was about $45 million. So almost 50-50, but slightly more biased towards the motorcycle end of things. So one of the interesting things about this article is they indicate that Harley shipped a total of 1,942 LiveWire units, with nearly 2/3 of those going to the United States in that 33-month period. And then of those, 1,648 sold, with over 1,000 of those being sold in the US. So going on into the article here, Harley is losing a lot of money on LiveWire so far, which they expect to do. It's a significant investment for them to be on the forefront of EV technology. And I think they are. I think they're ahead of Zero in terms of technology and features. But again, they're on the expensive side. So let's see if they can reduce costs, get these price tags down a little bit. They just announced the launch of their Del Mar model at $17,000. They're taking reservations for that bike now. It's lighter than the LiveWire 1, has about a 100-mile range instead of a 140-mile range for the LiveWire 1 reportedly. So a significantly lower charge range compared to the LiveWire 1, but it may be just fine for urban riders, which clearly with their marketing is who they're targeting for this bike. Kind of a cool looking bike, really. So what do y'all think about this? It looks like Harley's kind of still holding the bag on LiveWire. Didn't go as well as they had hoped in terms of raising outside capital and getting outside investors. They're up from 70 to 90% ownership stake in this separate LiveWire company, and they're going to have to spend a lot more money to keep it afloat, it looks like, until there's broader production and broader adoptance of electric motorcycles. I think the biggest challenge with EV motorcycles is the overall range and scarcity of charging stations if you're outside a city riding area. So that's what I have for you today. Please let me know your thoughts on this, and please stay tuned for future videos. Thanks very much.